Alrighty, traders, welcome to the session today. I want to make sure my mic's working and it is up and going. Welcome to the session today here with market traders. We're going to be talking about stocks, currencies, and of course cryptocurrencies as well. I've got my panel here, Chris Pulver as well as Tyson Clayton. Tyson's obviously a big guru when it comes to stocks and cryptos. We're definitely going to have a conversation around that. The same with Chris Pulver as well. So we're going to learn a lot about what's going on with the market right now, because there's definitely movement in the dollar index. There's definitely movement. We just saw a spike this morning with U.S. oil. The question is U.S. oil hit a bottom, and now we're going to see a climb to the upside? And if so, how's that going to affect the other currency pairs like Aussie CAD, Pound CAD, Euro CAD? Because they're also being affected by news around the world. So let's go ahead and take a look at the setup right now. We're going to go to our panel and let's take a look at the panel right here. Chris, good day. How are you doing, my friend?
I'm doing well, Gary. Thanks. Nice to be with everybody. Happy Thursday.
Fantastic. Tyson?
I'm doing good. Happy Thursday. Happy shelter in house day. It's good to be here.
Excellent, excellent. We got a lot to talk about, guys. I mean, we had a conversation just before we started the broadcast today, but you guys have been chatting about stocks and that. And I know, Tyson, you've put a list of stocks that we're going to go ahead and talk about. But let's go ahead and start off firstly with some news around dollar index and the U.S. oil, right? And let's start off with U.S. oil first, because we did have the move this morning. There was a tweet from Trump this morning stating that there's going to be some sort of movement with regards to Russia and the Saudis, and we did see a push to the upside, and Trump said that could be good for us, but we did see a push up to about $25, $26 a barrel this morning. I'm going to take a look over here at price, and price is trading right at 23, so a big push and then a pullback, probably just a market reaction based on the tweet, right?
Yeah, I think it is. It's all good. Let's cut production. I think oil's one of the most manipulated. Well, I mean, we live in a world of manipulation, I guess. So, but it's very manipulated, obviously, when big powers can control the supply and demand by flipping on and off the switches. But so I think it's the tweet. It's a kind of a relief rally. We've got technical levels that we could absolutely go up to. However, I am and will remain maybe a lifetime long bear on oil. With that being said, I'm super bearish. I see easily in my lifetime in the next 2, 5, 10 years, I fully expect us to be under 10, maybe well under 10. With that being said, could we bounce back up to 50? Sure, we could. Sure. Yeah.
Well, if you look at the charts right here,
there's opportunity, and that's one of the biggest themes that we've been talking about, Gary and Chris, I talk about this in every one of my webinars. I open up with, guys, crazy things are happening all around the world, but this is about opportunity, opportunity, opportunity. It doesn't matter what I think or feel. It's about what is moving right now and how do I take advantage of that. So I think and I feel oil is becoming useless, and especially now that it's becoming useless. Planes aren't flying, cars aren't driving, and I mean, so the consumption is down. Doesn't matter what I feel, though. It's rallying huge today, and we need to take advantage of these moves.
Well, it was a push, but it wasn't necessarily a rally because it was really just from the tweet that came out.
Yeah.
But we still have that gap between $36 a barrel and $42. That price still needs to fill up, right, Chris?
Yeah, I'm looking at that level. We were talking about that before we started. It's like, just from a technical standpoint, I wanted to buy it at $20 and see if it pops up to 30 to 35. I think 36 is a safe level to play. 40 would be a nice round number. And that's, we just said opportunity. It's like, I don't care I don't care why it has to go to 35 or 40, but I believe the technicals will allow it to do that. But I'm right there with Tyson too. It's like, I'm thinking about the next 5 to 10 years, like what's the shape of the, transportation industry, and what are we doing with planes, trains, and automobiles versus will we actually adapt more public transportation? I know that across the world, public transportation it takes a whole different light than what we have in the U.S. We took rails over trails. So, I know that it would probably be beneficial for me to have a hybrid car, to have a battery car. Like, that's fine. That's probably smarter. That's more efficient. But at the same time, like oil prices, like Tyson said, it's heavily manipulated. It's constant struggles of supply and demand. Right now, anytime that oil drops, you hear the word glut. There are rigs that are overflowing with barrels. And then this, it was essentially OPEC versus Russia. That's what started the oil crisis. And it was a double whammy with coronavirus. And then we had an oil crisis where the stock market's tanking. So all of these things created these massive movements. And just from a technical standpoint, all these inefficiencies. And I think what we saw today is more of like the short-term squeeze, not necessarily a rally. I mean, it's fading right now. So I still think we're gonna hum around that $20 mark. We might drip into, the teens a little bit to make it a little bit more painful, but we'll probably eventually come out of these levels and get back to 30, 35 bucks. And I'm going to be an opportunistic buyer at these levels and try to take some profit. I mean, if we can get trades in if you're just trading oil or looking at some ETFs, you're getting something that's, at current price and it jumps up 50 to 100%. That's opportunity on your position. So that's at least worth exploring.
Sure, and I know Tyson's got a couple of his stock picks for us to discuss, and one of them is the airlines, right? So that's obviously going to take some sort of toll on that, or at least some opportunity on that. But before we get into the stock picks, Tyson, let's go take a look at a couple of
something on the oil thing fast about this, because it has to do exactly with that gap. I just looked at the oil chart on a daily. I went back. I'm going all the way back to 2001, 2002. We have currently filled every single gap on oil over the course of the last 30 years with this last push down to 19. That's filled all downside gaps, which is really kind of crazy because, again, we had gaps that had maintained unfilled for 18 plus years. But we've now filled all those gaps to the downside. I thought there was maybe some still sitting, between 10 and 20. There's not. And so that actually makes this a brilliant setup to, before we go down to my long-term targets of under 10, this makes this a brilliant setup to most likely see a push higher to fill some of those upside gaps that we had, or those gaps higher, and then have that push down. So I think I'm right there with you guys. I think the long side is the way to go. There's a lot of really good value. And we'll get into the stocks in a minute, but I think that what this is going to do is it's going to set up for some massive consolidation in the energy industry, and it's going to set the big guys up brilliantly because they're going to learn from this. And so what I see is a nice rally in those stocks, them preparing for the next flush down that they know is eventually going to happen, and be really prepared for it with either hedges or diversification of business models.
Definitely.
Absolutely. So let's take a look at a couple of currency pairs before we go into stocks. Go ahead and take a look at Aussie Canadian. I know we've been talking about this because I got a bunch of pairs on this sucker right here, and I'm running long on this, and I'm going to have to start thinking about hedging. And I actually, in the trading room today, I was speaking to the students, and I said, man, if this thing goes and stays below this 85, 83 level, I may have to start thinking about hedging on other currency pairs. So I don't want to let go of my trades, but I definitely want to go ahead and start making some money on some other positions if U.S. oil is going to be the driver force in pushing this back down south. Do you guys have any pairs that you've now thinking about hedging against the possibility of this moving further down south?
I do. I know that Tyson and I have some equal opinions of the Aussie dollar and levels that we want to see the Aussie dollar go towards. I am also exposed a little bit on the Aussie Swiss, although I've taken some scalps and managed some of that a little bit. But I think one thing I'm trying to do is not necessarily, I'm a U.S. trader, so I can't technically hedge the same instrument, but the Aussie yen for me would be my way to hedge. If I'm looking for, and this is what I found myself doing during all the crazy stuff in March. I found myself, okay, I'm Aussie CAD long. I got profit on that. I'm Aussie New Zealand long. I had some profit on that. I'm still holding long term. Aussie Swiss, I'm holding. Aussie dollar, I'm holding. I'm favoring some Aussie strength. But the Aussie yen, part of it's because I don't really like the yen that much. But the Aussie yen, I was shorting, and I made, I don't know, probably somewhere between 400 or 500 pips over the course of 3 weeks on the Aussie yen. So I'm leaving that position neutral and open. And if we have another retest of those lows in the stock market, or we start to see, the big swings on the stock market from that bear move was right around 38%. So if we're just going to, quickly go from that 38% resistance zone back down to the lows, I think the yens might see some strength. So I don't trust the yens more than I can see them. So every time I'm trading the yens, I typically do a lot better trading yens with robots because the logic is there. and I'm always using a stop loss. I don't like to scale into yens. I don't like to guess and see where the tops and bottoms are. I'm just trying to get in, get out, scalp, just trade. Like today, perfect example. I was short Aussie yen, CAD yen, New Zealand yen. Every one of those robots paid out over close to 100 pips on each one. But if I didn't protect it, they went back to 0. So it's like I had a good push for the day, great push for the day. And fortunately, I protected my profits and just kind of reassessed. And once they started to it was like a straight move down and a straight move up. I'm like, yeah, I'm good. I'll just take profit. So I did.
I've spoken about the yens for a long time, and I've always said the yen is a currency from hell, man.
Yeah.
It just bites you in the butt. But listen, it looks like you've had some serious bad luck with the yens, and that's why you're starting to protect yourself with those things. But hey, talking about the Aussie US dollar, right? Because we do have non-farm payrolls coming out tomorrow. We had the numbers with the unemployment claims coming out today. Horrible numbers. I mean, it was a no-brainer, right? We didn't expect anything better. But we are expecting non-farm payrolls come out tomorrow, which is ultimately going to affect the movement of the dollar. Now, what are we thinking? Are we thinking most of it's been priced in already? We're not going to maybe see a bit of choppiness tomorrow? Or is the technical saying to us that at the moment right now, we should be seeing a little up move or a downside move on the dollar index? I'm going to go to the charts while you guys talk about it. What do you guys think?
Can you guys hear me?
Yep, go ahead.
I do now, yes.
Tyson, I was going to ask you, take the Aussie dollar, because I think you can tie in this with the unemployment stuff, and if you think it's priced in, and I think both of us have the same outlook on technically where the Aussie dollar is going. So tie this into the unemployment stuff.
Can I talk about the Aussie CAD for a minute, though?
Oh, yeah.
I've got a great hedge that I think makes brilliant. I think it makes perfect sense. It's my opinion, so it's got to make brilliant sense for me.
Brilliant.
No, so this move in oil, I think, is going to be sustained, and I think technically it makes sense, and it kind of lines up with risk on, risk off. It lines up with the risk on trade continuing in the stock market, and I see the S&P going to 2,900 before that next flush down. So I think that all lines up perfectly, and so I'm a fan of going more risk on, which would be I like the longer term. I like the hedge in the Aussie yen. On the sell side. However, I'm not necessarily convinced it's going to be selling off yet. What I'd rather do is I'd rather say, you know what, I really like risk on pairs, and that means that the CAD is more of, in today's environment, the CAD is going to be looked at more of a risk on currency because oil is going to snap back and rally so much, so it's going to get a bigger bid. Mm-hmm. So how do we take advantage of that? What I would do is I would look to go long. I would hedge out my CAD completely and stay long the Aussie, and use that as my risk on. But I'd hedge it against the risk off. So the way you do that, if you're long the Aussie CAD, is you go long the CAD Swiss, which leaves you with a net position long Aussie Swiss, which I absolutely love right here, right now, because that lines up. Long Aussie Swiss lines up with a risk on trade. You're trading against a risk off currency pair, and you're hedging out your exposure of the CAD. That's what I would do. I'd go long CAD Swiss right now.
Tyson, that's funny you say that, because I think CAD Swiss and Euro CAD have two amazing patterns right now. CAD Swiss, if you could bring up that chart, Gary, if we can show it to the traders watching out there, 68.80. If you write that level down, if we get above 68.80, that's the gap from the oil movement over the weekend. That is a bullish head and shoulders that we're seeing. If we close above 68.80, we're looking at levels at easily 71, 7,200, if not higher. But I think that the writing is on the wall for the pattern, and EuroCAD is the same way in reverse. EuroCAD has a really nice crown pattern that's bearish, and we're looking to get below 5,400, and we had a quick move on that today. So I've got a robot that's running on that already. And then CAD Swiss, I'm looking to confirm that level above 68.80 for that bullish head and shoulders. I think those levels look fantastic.
And I don't even think, based on the current position in the Aussie CAD, I don't even think weighting is all that important, because you have two currencies that are fairly correlated. But what you're doing is essentially you're saying, what I'm really saying is I'm more convinced of the risk on rally, which means the Aussie Swiss should do better than the Aussie CAD. So I'm more convinced of the risk on nature of the market environment we're going into probably for the next few weeks. So I just want to get long the Aussie Swiss, and to do that in the position in the Aussie CAD, I would just right now I would add a long position in the CAD Swiss, and I love that position.
Nice.
Yeah, I think so too. From a technical perspective, as I break it down right here, if you look at the chart, it is certainly setting up with a large consolidation. Hit a lot of support there, trading above it, and there's a lot of choppiness at the bottom of this level, and there is, just like Chris mentioned, that there's a gap that still needs to be filled, but there's still a lot of room to the upside. And so you're right. If oil does start pushing up, it would be a good hedge to be able to ride this thing going back up north. And I think the risk on, risk off, trading the Swissy, I think we're going to see some weaker Swiss in time, and that's going to also push it up as well. I think that's a great hedge. Good call there, Tyson. And Chris, I'll go ahead and give you some kudos there as well, Chris.
Thanks,
all right.
Gary.
Let's get into stocks. I mean, crazy as it is, stocks are flat bottoms. What are we talking about when we get into stocks? I know that you've got a list of, Tyson, you've brought a list. I'm going to go ahead and pull that list here. I've got it on my computer here, so I'll go ahead and share with everyone what that list looks like. But it's a good list of, hang on, do I have it? I think I do. Here it is. Yeah. Let me go ahead and pull it. Yeah. Okay, so this is what it looks like right here. These are Tyson's picks right here. I'm going to go ahead and increase that a little bit more so everyone can see it clear, nice and clear. There it is there. So there's Tyson's picks for this week. Is this for this week, or this is a long-term strategy?
These would be longer term. So essentially the idea, these are kind of themed trades, so theme investments. And so the idea of this is what sectors, what parts of the economy are getting beat up, maybe going to continue to get beat up, but gonna still be around forever. Like they're not going anywhere. And if they do go someplace, then what we're doing here today doesn't even matter anyway. So that's these, right? The consumer's not going to go anywhere. They're going to tighten up. Nobody's really spending much money on anything. When they do start to spend money, we're addicted to debt. We like to subsidize the cost of something, or I pay with credit cards on pretty much everything, and then I pay it off at the end of the month. But companies like Capital One, it's not going anywhere. It's going to stay. It's paid a solid dividend for a very, very long time. It's a very financially sound company. It's been beat up. I actually think it's going to get more beat up. So I've got buy prices that I want to buy at, and they're anywhere from 10, 20% lower than today's prices. And so I'm not necessarily buying today, but there are ways that I can use options to buy. So I've got Capital One, COF, because the consumer is still going to spend money when this is all said and done. We might do it in a different way. I might not go to the store as much, but I'm going to do it from Amazon. And asset management, I think asset managers are actually going to do well in this. I think they were kind of looking forward to this. I think they were hedging a little bit. I also think that when this all comes to fruition in a year or so, if they have done decent or outperformed in their asset management, people are going to say, you know what, I need to make sure that I have an active professional managing my funds. I might be able to do it myself a little bit, but I want to make sure I have an active professional managing a lot of my funds. And I think Morgan Stanley set up well. Plus, they're doing a buyout of E-Trade Financial also, which is really, really good. Delta, the airlines, we're still going to fly, right? I'm still going to go on vacation. I live in Minnesota. I can't stand the winters. I'm going to go on vacation, and I'm not going to drive because I don't like to drive. So I'm not going to drive.
Listen, yeah, unless you're my wife, she will not want to fly. She loves traveling, but man, if she can go by boat, by feet, by car, she'll do that. She doesn't want to get on a plane. But you're right.
I'm not saying I like to fly. I don't like it. I don't like the whole transit thing anyway. But I have to fly to get places. So that Delta's the strongest, most financially sound airline right now. Again, I want to buy it lower. TAP. I like beer. I drink beer. Molson Coors. Not going anywhere. It's a high dividend stock. D.R. Horton. People are still going to buy houses. Cisco is a play on what we're doing right here. It's kind of like a voice over internet. It owns WebEx. It also is a play on 5G that is coming out that's going to be big. So Cisco is a good buy. I actually like the value here, but I want to buy it at 30. And then there's REITs, and REITs have gotten destroyed. But these are the two REITs I like. There's REG, which is I think it's called Regions REIT. And essentially what it does is I want to know who their tenants are, right? I don't want people that have their tenants are movie theaters and go-kart tracks, right? Today it's like, oh, well, wait a minute, that's maybe not the greatest. What I want is I want a REIT that holds a lot of, your tenant is Sam's Club, Costco, your tenant is CVS and Walgreens, and that's REG is that. So that's an amazing REIT. It has an average growth of dividend of about 6 to 7%, and it's consistently paid that dividend, I think, for 35 plus years. Awesome, and it's sitting at a great value right now. And then the other one I like a lot is Wellstone, which is WELL, which is a senior housing and also a hospital play. I think that senior housing is going to change a little bit. I think there's going to be more stay-at-home care, but they're already starting to get into that. And they're also in the hospital realm. And so that's with the aging population, that's a really solid long-term. It's paid long-term. It doesn't have an unsustainably high dividend. And so I like all these stocks, but I want to make a big point. I like all these stocks. If I had to buy today, because I was forced to, I would. I don't mind the values today. However, I would rather buy them 10, 20, 25% lower, and I'm going to use options to do that.
And just to go to that option strategy you're talking about buying puts to go ahead and get priced to get it priced lower, right?
Yeah. So instead of buying puts, I'm a big fan, especially now. I've always been a big fan of selling puts. So the smart money oftentimes underwrites the risk within the market. They don't want to participate in the risk themselves. They want to underwrite the risk because people are fickle. People are irrational. They let their fears get out of control, and the smart money knows that. And so what I would rather do is I want to be on the smart money side, and I want to take advantage. I hate to say it this way, but I want to take advantage of people's fears. The world's going to end. It's going to hell in the handbasket. And I want to sell. I want to be the insurance company that looks and insures your home, Gary, after a hurricane just went through Florida. That's what I want to do. And that's exactly what I'm doing here. So instead of buying the puts, I want to be the insurance guy who sells the puts, collects the premium. And worst case scenario is I own that. I collect that premium. So if you want your house insured after a hurricane, I charge you a bunch of money. You don't have to pay me. I don't have to pay you that money back if that hurricane doesn't come next year. I keep that money, and then I come back to you and I say, hey, you want me to insure you again? It's the same thing I'm doing on this portfolio here. I'm saying, hey, these stocks might go to zero. They're not gonna, but they might. So pay me money. I'll insure your portfolio, and I'll own them at a lower price.
Yeah. All right, let's go through a couple of these stocks, and I'm going to go through the charts. I've actually got it set up on the chart, so let's pull it up over here on the chart. And let's take a look and see what this looks like from a technical perspective. And we'll jump into Capital One first and take a look and see what that looks like here on the chart.
On this, Gary, too, is not only technically do these look like steals, but fundamentally right now, Capital One is a stock that's a really good example. Fundamentally, this stock is wildly cheap, and we went through. We're kind of doing a little inside stuff. We're doing kind of a stock trading kind of class where I'm leading it with the analysts at MTI, which is kind of cool. And we're going through some of the things that how we value stocks. And Capital One's one of those stocks that doesn't have a ton of debt. It has decent debt, but doesn't have a ton of debt. Has a lot of cash flow, and holds a bunch of money in cash. So it's going to be able to pay its obligations, and still has a nice growth rate with the dividend. And so fundamentally speaking, this is a really nice stock also. So I pay attention a lot more to fundamentals in my stock portfolio than I do currencies, because currencies I'm in and out maybe within 1, 2, 3, 4 weeks. Stocks, I always think about, I might, like for example, I bought a bunch of Budweiser 2 weeks ago and I sold it 3 days after I bought it. Not because I wanted to sell it, but it gave me a 14% return. And I'm like, I just can't, I got to be prudent about it. And so I bought it on fundamental long-term reasons, but it gave me such a great return. So I always look at a stock as like, hey, if I have to own this stock, am I willing to own the stock maybe even forever? And this is one of those stocks that I'm kind of willing, if I had to, I'm willing to own it forever. And so fundamentally, it's really nice too. But yeah, if we pull up the charts, it's sitting at a nice technical level now, but not cheap enough for me. I want to own it at 40.
Mm-hmm. Well, I'm just pretty surprised that you bought Budweiser and managed to sell it before you drank everything up. It's just like, especially being quarantined, you got to do something, man. Yep. But yeah, looking at from a technical perspective, right here, you're looking at these levels of support here, and you're saying, man, a market's broken through that support right here. Market's going to come back to retest that. You got support over here, and then you got a long-term support down here. And so we're testing that second support level right here, and we haven't had a bounce yet. And if we do have a bounce, it'll come back up here to maybe this level, just shy of 56, and then maybe head further down south. So do you see? And this is the thing, we talk about fundamentals, right? Technicals, this is difficult to go ahead and discuss through technicals when the market's gone ahead and moved that far down. Now you have to really look at fundamentals and see if it's fundamentally at a support level, right? And you just spoke about all those data that you take into consideration in order to be able to make those decisions, because from a technical perspective, we can see a possible upside move, but from a fundamental point of view, is it ready to go ahead and start moving north?
Yeah, I would say it is. Fundamentally, it is a great value today. However, stocks, pretty much everything has a tendency to go much further, much faster than we think it can. So I don't think that the bottom is put in. And if we do flush down one more time, we are going to get better buy prices. I think we're probably going to retest those 40 levels. If we come back to that 40 level, I wish I would have started buying there. I didn't. If we retest those 40 levels again, that's where I want to buy. But however, instead of just buying, if you look here, what I'm doing is I can go out to September. So we're talking April, May, June, July, August, September. We're talking 6 months, and I can sell the $45 put right now and basically be the insurance guy and collect $7.75. That means this: if the price is above $45, I make $7.75 in this trade, no matter what. So I make more than 20%. If price is below 45, my average, then I don't care, because I want to buy it at 40 anyway. My average ownership price is going to be $37.25. So basically, the stock needs to go down, and it's below that right now. But I don't really care, because I'm willing to own at 40. I'm getting paid $7.75, so my ownership price is $37.25. So if it goes up, great. If it goes down, great. I want to own it, and if it stays still, I'll still own it, but I'll own it at $37.25, and I'll make a return. So I didn't. I should have. I did not, but I think I'll get another opportunity.
Yeah, sorry, my mic was muted, but I said, it was at 38, and did you buy in again, or at least buy in, and your response was no, you didn't. Okay.
No,
good.
I didn't. It just came up on my watch list. I had a couple stocks like this on my watch list. I had Discover and Capital One. I did buy a little bit of Discover, got out of it. I like Capital One longer term now, because Capital One services more the lower end of the credit profile. And I think the lower end credit profile is safer than the higher end credit profile today. So,
all right. So now we get to. I'm going to open up right here another chart here. This is on. We got the travel industry, right? We got the airlines right here, Delta Airlines, and a big move right here. We see a beautiful actual rising wedge here. That if you actually paid attention to this before the actual big crash, you would have actually decided to get the heck out of Dodge and maybe shorten this based on just this pattern low. Especially when price started breaking through this level right here. This was a no-brainer. When you broke through here, this was saying, hey, this just take all bets off.
Yep. Yeah, I'm not a big – so here's the deal. I do want to mention that too. I am not a fan of – selling stocks. Everything we're talking about today when it comes to stocks, for me anyway, is long-term portfolio. I'm a fan of shorting stocks, or having inverse ETFs on short-term, daily, weekly plays. The reason why I am not a fan of shorting stocks long-term is because we have 100+ years of history saying you're going to lose. So it is what it is. Now, however, there are bets. I know people that have made hundreds of thousands of dollars placing strategic bets on buying puts against different industries. As an example, like, hey, I think the airline industry is going to go through much more pain than they think. So finding the lowest quality airline stocks that might go out of business and buying puts on those, and maybe they go out of business. I would not do that on a stock like Delta, considering that it's the best of breed. It's got a great balance sheet. However, we talked about this earlier, Gary, in our session. There is something called a Parrish Trade you can do. If you're like, man, I don't know, maybe Delta's going to fall more, maybe it's going to. What you can do is you can find the stocks within a sector that have overperformed. We were talking about financials earlier. So Morgan Stanley or Citigroup has underperformed. It's down like 37% in the last month, whereas JP Morgan is only down 25%. Very similar balance sheets, very, very similar market caps and similar business structures. So what you could do is you could go long Citigroup and short JP Morgan and look to kind of Parrish trade it and look for it to kind of go back home or go back in alignment. There's different things like that we can teach or that we can show in the future also.
Yeah, that makes sense. That makes absolutely good sense. And
what do you think? I feel like I'm doing all the talk. What do you think, Chris?
Well,
I was going to say, Chris,
on the same document, we got the list, so we can keep going and keep hammering and egging on what we have. I think what traders should be doing out there watching this is, take these tickers down, write these tickers down. Tyson, you've got options plays on all yours. I mean, mine is part of it is if I had to own them, I would. If I had to turn them and burn them for 50 to 100% gains, I will. So that's really what I've been picking. I'm trying to go for the bargain bin. I mean, this has been some of the best opportunities we've seen in over 10 years. So I'm certainly interested in just getting loaded up on some of these levels, but understanding that I don't think bottoms are in yet. So if you want to scroll down there, Gary, I'll take a look. I mean, I had.
Yeah, are you shorting any stocks at the moment, Chris?
No, so same thing. Like I basically my shorting stocks was I played volatility and I played inverse ETF. So I was totally ready for this. It's funny. I actually had my K1 came for 2019, and on the TVIX, the UVXY and the VIXY, I was actually showing losses in 2019, and then I made like 600 to 900% gains in 2020. Wow. So this whole drop that we saw from hitting new highs in February and then tanking through March, I wrote all those volatility plays, and everyone in the trading room did the same thing. We had some really good calls. TVIX was going ballistic. I mean, that went from, I bought it at $10. We had a 10-to-1 reverse split, and it gave me a break even at $100. It ended up going nearly to $1,000. So that was a huge run. The VIXY, the UVXY, all those worked out awesome. And then we also traded inverse ETFs. I did a double and triple leverage S&P inverse ETF, and those all paid out close to like 50 to 100%. So that's about my way of shorting. And now it's like I'm bargain shopping. So I know if you show my list there, Ford, Tyson and I were talking about this before we went live today. My take on Ford is, look, last year, GM and Ford collectively made $10 billion in profit. I think financially speaking, Ford is doing better than most. As Tyson said, earlier when we were talking, why is it $4? Why is one of the largest automakers in the world a $4 stock? Well, the pension is the big concern, but I look at it as like, what's the downside? If it's trading at, it's currently like $4.50. If I can get that thing to retest lows around $4, which I'm in, by the way, at like $4.25. I mean, look, I'll take zero. If Ford goes out of business, it goes to $0. That's the risk I'm willing to take. But if the next 3 to 6 months or the next year, we get to $8, $10, $15, I'm going to, that's a 200 to 300% gain. I'm going to take profit. So it's a bargain. I wanted to also talk about the SPY, like just buying the ETF. Look back into 2008. Look back to 2008, 2009, when we actually saw the market bottom, and then look at where we just went for the last 11 years. If you bought the SPY at, what was it, like $150 or something like that? I mean, the SPY, no, it was less than that. I think the SPY was it was below $100. So weekly chart going back to 2008 and 9. I mean, we're talking about the SPY at $65, and we just capped out at $330. I mean, that's 500% on your position. So the SPY is one, it's like, look, if we have a 40 to 50% correction in these markets in this year, that's fine. Bring it on, because long term, I would say that if we're ever going to make a new historical high, we're looking at 100% from here. If we go 50% down from these highs, we're looking at 100% upside just to get back to those highs. That's pretty freaking awesome.
Yeah, so I agree 100%.
Yeah, it's like, so that's an ETF play to, rather than, looking at what do I trade stock wise, like that's an index play, and not very often. I mean, historically they say just, never time the market. Your traders can't time the market, which is bullcrap. Like if you're watching, at least know how to protect profits. Like I've been telling, friends, family, anybody interested in listening to me, I've been talking about the last year plus, like, this is a really questionable time for like, why are we still going bullish? Why do we still have an expansionary run? Why are we still in a bull market right now? Like a lot of things, the market shrugged off, and then look at what happened. Like, yeah, we're in unprecedented times, and it was a weird, I know Gary knows this, but Chief likes the word crescendo. It was a weird, like, apex of emotion and sentiment and a technical thing that needed to happen, which is a correction, and it just happened so furiously. But now we're talking about, if I just bought the index at a 30 to 40% discount, or Vanguard index that pretty much moves neck and neck with the SPY, I mean, you've got just an index play that can get back to these 2020 highs, and you're looking at, 60 to 100% gains across the board. So I that's why I've been watching these correction levels. If we hit that 40, 50% level, getting back up to those highs from this year in February, you're looking at 100% on that position. So, and if you want to hold it long term, and let's say it's a 12 to 24 month recession and bear cycle, okay, usually bear markets are done in 2 years. So if we go 2 years of terrible trading and recession, and then we find out how to find some bottoms and we make some gains over the next 4, 6, 8, 10 years, again, trade it, be long, take profit, and double and triple your position, and that's just an easy play. So that's more of the index play. That's pretty easy for most traders to follow. Twitter, Facebook, very interested in those. I mean, what are we doing right now when we stay at home? We're using Facebook, we're using Twitter. I mean, I've probably upped my Twitter game a lot in the last 2-3 weeks. I mean, I'm doing a lot more content at home. I'm doing more stuff on YouTube, Instagram, Twitter. The problem right now is revenue-wise, no companies are advertising on Facebook and Twitter because nobody's buying anything. Consumer spending is at a minimum right now as people are out of work and unemployment is skyrocketing, but that will change. Unfortunately, Twitter and Jack Dorsey, they've never found a way to really monetize like Facebook has, but Twitter's still a fantastic medium and it's cheap. If I can buy Twitter at $20 or less, I think it can get back to $30, $40. I mean, it's still a high value company. It still has a ton of use. Our commander-in-chief uses Twitter like it's going out of style. I mean, I don't know how many tweets a day we have, but it's ridiculous. And the usage is up. I think it's not going anywhere. And I think if they can figure out their ad revenue, then I think Twitter's a safe place. Same thing with Facebook. Next, Blackrock Fund. That's actually kind of a special one that I've been in and out of for the last several years. That is a low volatility dividend stock. And so the lowest I've seen it is $8. The highest I've seen it is $18. So essentially I try to buy it at the lower quadrants. If it comes down to $12 or lower, I essentially load in around $12.50 to $10 if I see those levels, which we just saw recently. So $12.50 to $10 is my lower threshold, and I try to hold on to it to $15, $16 plus in gains, and there's a 5.5% to 6% dividend every year. So it's a dividend reinvestment. It's a good price. It moves like a stock, and you get the dividend exposure as well. So to me, that's kind of a win-win if you can buy it low and either reinvest it or keep it. So that's one I like to hoard some cash in. Silver. I really should have been tracking silver more long-term. I would have added more to it. Silver just came down to $10. I mean, I had $12 on silver, which I've been buying since 2018, and had some really nice profit. I bought it around 12. It just missed the $20 mark, and I didn't take any profit last year, which I should have because we got up to like $19.60. But I'll just wait it out. I think we can get back to $19, $20 long run, especially if we do have a full-on recession. Silver does tend to appreciate and do pretty well. And then Verizon, Tyson mentioned. Tyson, what was your tech one? Cisco for 5G, right? Get in the 5G movement. I mean, I know right now it's a race. AT&T, Sprint and T-Mobile, Verizon. Like Verizon to me is, I look at the range. It's a huge telecommunications company. If you're a phone provider, I mean, Verizon, I think the downside would be, what is Verizon doing as far as TV and bundles? Not much. AT&T, on the other hand, everybody, I mean, I hate bundles. I think it's a friggin' ripoff and it's a racket. But if you've got phone, internet, cable, you name it, and it's all bundled, I mean, AT&T is huge. We now have AT&T, Verizon, and T-Mobile, Sprint. You have 3 choices in the U.S. That's it. That's. I mean, it's not a monopoly, but it's pretty darn close. So, I mean, price-wise, if we get to $40 on Verizon, I'd be a buyer. Get up to 60, 65, hang on to it. I think it's safe. It's not going anywhere. Telecommunications, race to 5G. I think Verizon's on that part. Everybody that has Verizon phones, for the most part, I hear good things. Great service, right? Never drop a call. That's better than what I can say with AT&T. So there you go.
I have a question, Chris, on so let's talk about the SPY for a second. So,
sure.
And I want everybody to think about this. So you want to own at 200, and you're willing to own at 200 long term?
Yes.
Okay. So if I told you I could have you own at 200, or you're going to either own at 200 or your return's going to be 10%. Mm-hmm. But that's going to be the max return. If we go from 245 to 400 in the next 8 months, 9 months, you make 10%. That's it. Would you take that trade?
Probably not.
Okay, I would.
You would?
I would, and the reason why is because I think that, first of all, I think 10% in the next 7-8 months on an annual basis, I'm really happy with a 15%.
Oh, yeah.
So, but what you could do, my point is you can go out to the December 31st, 2020 put and sell the 220 put for $20.
Yeah.
$20. So you're basically making a 10% return on the cash equivalent. So your average price is 200, and you're guaranteeing yourself the 10% return. So think about this. Now, as long as the stock doesn't go down by 11 to 12% from current price, you make 10% guaranteed.
Right.
And your break even is 200. So you're making money up, down, or sideways. Now, the only downside to that is you're locking in your 10% max return.
Correct.
Which I just going to do.
Yeah, no, I think right now, I mean, any guaranteed yield is probably a safe thing. In fact, Gary, I think in our one of our meetings, I talked about the book, The Man Who Solved the Market, about Jim Simons, his Renaissance fund, his Medallion fund. This guy has an amazing history. One of the most intriguing and potentially polarizing hedge fund managers in the world. Totally algo based, derivative based, trade a lot of futures, trade a lot of Forex, automated. So the one thing was like, I got to find a pattern in these markets. And it was just quant-based trading, algo trading, automated trading. He was down the best funds that he's done for years, they got smoked by 17 to 20% on $130 million under management. Like, that to me was like, this guy was averaging 65% year over year for almost a decade. He was outpacing Soros. He was outpacing Warren Buffett. He was outpacing Icahn, all these guys. Dalio, like, nobody could touch Jim Simons. And to see that this fund, to me, one of the most intriguing minds in the hedge fund world, 17 to 20% down for this first quarter, that just shows like survival this year is paramount. Like, walking away 5 to 10% this year is seriously incredible. It really is. And so
so that's what I'm doing. I'm giving up. So when I'm selling these puts, I'm giving up upside. I'm for sure giving up. I'm locking in. I'm saying, hey, I'm good with 10%. Hey, I'm good with 12%.
Yeah.
And so I'm giving up. We might bounce, and these stocks could rally up 45%, 50%.
Yep.
And I'm going to miss it. But I'm going to sleep well knowing that if I miss it, I'm still making a good return. And if I don't miss it, I'm buying exactly where I want to buy.
That's true. Very true.
Yep.
Yeah, I think those are great. Certainly things to consider with what you want to do with your investments now, because that's a great variety to have. It's like, I don't mind some of the ones that I'm talking about having long term, but
I think Ford for sure is on that list where it's like right now it's an option. It's buy time for me. It'd be a buy time right now.
Yeah. Yeah, and I'd buy and hold it. And the USO, UCO oil plays, I know Gary is probably going to chime in here, but same thing. Like, if we get a bump in oil, those are short term. I'll turn them and burn them, take short term gains, and be done with it. Yeah.
Yep.
I want to check out and move this conversation out to Bitcoin. Cryptos, not just necessarily Bitcoin, but cryptos. Cryptos have hit bottoms as well, and there's definitely still Tyson, do you do any intraday trading on cryptos, or are you just also more long term, just buy those dips and just keep and hold?
Yeah, I'm a long term guy, and I'm a fan. So I'm kind of a Bitcoin maximalist, but because I think it's ultimately going to be the store of value. Fast forward 5, 10, 20, 30 years in the future. And I won't come off of it until I'm proven wrong, I guess, which is probably illogical. But I'm a Bitcoin $1 million guy. I think I'm going to see it someday. I don't know. It could take 50 years. I have no clue, but I do think we're going to get there. It was built to get there, essentially. Bitcoin $1 million is essentially each Satoshi would be one penny, equivalent to what dollars are. And so, however, with that said, there are blockchain. I'm a fan of blockchain also. So Bitcoin is more of a store of value. I also think that there's ways it's going to be a transactional currency. And, I can get in the weeds and I can put on my tinfoil hat with some of the things conspiracies that I think are going on right now with some powerful governments and powerful organizations. And I think Bitcoin's going to serve a purpose always. And I think it's going to actually come in very useful for those that still desire freedom someday. So I think that's important, but also there's blockchain plays. I'm a big fan when I look at currencies or cryptocurrencies, I always ask myself, what is the use? what is the use case? And it's got to have a use case. I got to understand it. There's cryptos that are out there that are phenomenal, that like, oh, they're going to change the world and it's amazing. And this guy that developed, it's the most brilliant guy, Charles Hoskinson, I think that's his name, of Cardano. Supposedly it's the greatest blockchain ever created, but I can't, my mind, I don't know, maybe I'm too dumb. I just can't wrap my mind around everything he's doing in the scientific world and all this kind of stuff. And it's like, well, if I don't understand it, then maybe I shouldn't invest in it. So one of my favorite blockchains, so I like Ethereum because I understand Ethereum and I understand some of the projects that have been built off of Ethereum. So that's cool. The other one I like that, because I'm a big fan of entertainment investing. I think entertainment investing for if somebody could focus on just investing in entertainment stocks or entertainment within the economy and do well long term. And the entertainment focused blockchain company that I like, that I'm the biggest fan of, that I have the biggest position in, is Tron, TRX. And the reason why is because it's well funded. It's gotten beat up in the media and all beat up in Justin Sun doesn't know what he's doing, all this kind of stuff. But they have a working product and they're focusing on the entertainment side. They're focusing on they own BitTorrent, which is streaming videos and different things like that. They own a lot of online casinos and online poker places, online sports betting places, different things like that. Entertainment things are being built off of the Tron network. And so I'm a big fan of Tron, but I'm also a big fan of the subcoins, just like Ethereum. Ethereum, there's many cryptos that are built off of Ethereum that you can invest in. There's cryptos that are built off of Tron that are also investable. And so there's projects that are being built off of Tron that are very interesting, that have really intriguing use cases that I think are nice. So I'm a big fan of that. So my three favorite would be Bitcoin, biggest allocation there, Ethereum, and Tron for now. But I am not a trader of cryptos. I'm a hodler. I'm a buy. I'm a hold. If it comes down, I buy more. I'm in some of the subcoins. I'm in with Tron. Pay me a daily dividend based on the usability and the users each day. So I take those dividends each day and I rebuy more, and I just buy more, and I just keep stacking in. And so, but there are great projects. A lot of these projects are going to be gone in 10 years. The industry is going to look completely different, and it's going to come down to a few huge ones, I think. But if you can find the winners, there's a massive amount of money to be made.
Yeah, and I know, Tyson, you and I got into Bitcoin mining and a few years ago.
I took a bloodbath in that beast.
What is that?
That was a bloodbath for me. I mean,
that was a bloodbath for me too.
I got into hardware mining. At one time, I was a partner in a group that I myself owned 25, 30 machines. We owned about 85 machines that were set up in a warehouse in North Carolina. It was pretty much a complete loss for me, so that wasn't fun.
Yeah, I had the same experience, and just so there was a question on, can you mine Bitcoin? And the answer to that is, yeah, you can, but right now you're not making any money. It's costing you more money to mine than it is actually. In fact, most of the miners have switched off. That's caused price to drop from 10,000 down to where it's at right now. Also because we've had a lot of miners switching off and not mining because it's costing just too much money. I don't know.
Which is actually great because that's supporting the price. So
right.
It's because mining costs essentially the difficulty of mining these have went up. It's supported price, and so unless you're mining from Bangladesh and your kilowatt costs are like nothing, and you have a massive data center, it's not cost prohibitive to mine, which is bad for the miners, good for the coin, but it's good for some miners. So it's actually a good thing. It's natural supply and demand. That's another thing I love about Bitcoin is it's simply natural supply and demand. It just is what it is.
Yeah, guys.
I looked at it. Yeah, the crypto stuff. I mean, I'm with Tyson with a long term, and I've been talking about it for the last 2 years. Like, I did not buy the euphoria in 2017-18. I share the story a lot of times where I had an Uber driver talk to me about getting in when it was at $18,000, and I'm like, no. So I didn't even start getting in until it was below 5. It was under 5K. I started getting lots of Bitcoin. So Ethereum, Bitcoin, Litecoin, those are my majors. I've got some Ripple as well. which may or may not. There's no supply limit to Ripple, so that's a concern. But there's backed by a lot of banks and institutions. I look at it like a venture capitalist. I mean, like Tyson said, Tyson, if your $1 million Bitcoin comes together, then hopefully you and I are live to see it. And where do you want to fly and party, man? Because that'll be freaking awesome.
That will be awesome.
Yeah,
I agree.
Yeah.
You know, Ripple's an interesting. I love Litecoin also. It's kind of looked at as gold and silver, and I think that's there's ways to value Litecoin in relation to Bitcoin as far as the trading price, and there's ways to hedge that. Ripple, I just honestly, man, for the life of me, I can't wrap my head around the why. I struggle with what's the purpose. I just don't. I don't know. I don't think it's that hard to move money anymore in this world we live in. But maybe it is. Maybe I have no clue.
I was taking up Ripple simply because it seemed like it was legitimacy of literally investment banks and huge institutions that were backing Ripple. They were backing the technology. And so there's got to be some tangible value to that just by the endorsement alone. So I'm like, hey, and honestly, I didn't even start buying it until it was like 25 cents.
Yep.
So 25 cents is my downside, to hopefully, I mean, if it got back to 2018 highs, it's $3.
Yeah,
that's a pretty good return.
The point. That's the point. And I tell this to my father-in-law, and he's like, hey, what about Bitcoin? I'm like, oh, and he's like, oh, it could be nothing. I was like, well, it's risk to reward, right? So exactly. I believe the reward, let's say you think I'm out of my mind for $1 million. Okay, let's say the reward's 100,000, right? We're talking about a $7,000 risk, give or take, a little less, and a $93,000 reward.
Right. I mean, as a trader and investor, you're going to take that all day long.
Yeah.
Yeah.
And I think that's what we're talking about. I think the next bull run, maybe not the next year bull run, maybe not the next 2 years, the next 5-10 years, to say that Bitcoin could be at $50,000, $75,000, $100,000, it's very realistic.
Yeah.
But also on the flip side, to say it could be at $100, Tyson, sure, risk versus reward.
Yep, absolutely.
All right, let's go ahead and flip back to the currencies, man. The things that make things happen for us that aren't buy and hold situations. It's actually buy and hold, buy, sell, based on the volatility we're having right now. Let's go ahead and take a look at a couple more pairs right here. Is there any hot pair that, and I'm going to give Tyson and Chris, and I'm going to speak about mine as well. Is any hot pair, Chris, that you're focusing right now that you want to go ahead and share some information on?
Well, like I alluded to earlier, I think if the CAD pairs have a big pop, I think the Euro CAD and the CAD Swiss are set up for a great pattern trade, which, a lot of times in those higher time frames, those pattern trades they're right there setting up. It's just a matter of that little nudge, that little confirmation. Maybe it happens over a weekend. Maybe it's because of a spike and a squeeze in oil. All that thing, all that technically makes sense to me in the currency world. So I like Euro CAD short. I like CAD Swiss long. I'm still a huge believer in Aussie New Zealand. I've been talking about it for a while. I still think Aussie New Zealand is capable of going to 107.50, 108.50. We've got the both banks now are down to the same rate. So we have 0.25. And hopefully they just stay on par. And it's like there's no real benefit to having one over the other. So just be a good technical trade. So that gets me out of a lot of dollar nonsense and exposure. That gets me a lot, no more. I don't have to make position trades on dollar pairs right now. I have to make position trades on pound pairs or yen pairs. I just trade them. Like if I can trade, I mean, the volatility's been better. So I'm trading pounds more day to day. I'm trading euro pairs day to day. I'm trading whatever I can day to day. So I'm way more short term over the last 3 to 4 weeks than I've been in a long, long time, but that's just because the trading ranges have improved. So position-wise, I like Aussie New Zealand. I know Tyson has put together a great prediction on Aussie pairs that he can touch on here just a second, but I like CAD Swiss and I like Euro CAD for positions in Aussie New Zealand. So those are kind of my hot picks for I'm going to hang on to those because I think they can pay out 300 to 500 pips each just in the bigger movement. And I'm going to, of course, add positions and take as much of that as I can. But that's it for me.
Okay, well, great stuff there, and absolutely hit it on the nail right there. I know that Tyson, you've got your predictions on the Aussie crosses and that, and if you guys aren't in the webinars, the daily webinars, get inside the daily webinars because they're going to be talking about these type of things constantly. And Tyson, give us some views on what is it that you spoke about with the Aussie predictions.
Yeah, and you kind of think about the theme that we've talked about all day today, and I think the one thing that we've is apparent to me, it is we're risk on. This risk on is coming back in. I think we have to temper our enthusiasm as high as, thinking that this thing's going to go to the moon. I don't think it's going to. However, I do think the rally we saw last week and the rally we're seeing a little bit today, I think it's real, and I think it's going to have some legs to it over the course of the next few weeks. And so thinking in that theme, I like the Aussie pairs for sure. And again, I put together a prediction, and you got to make sure in our webinars, and we have one coming up at 4 p.m. here. Chris and I are going to be together, and here's the deal. Chris is killing it in the markets. He's making 100, 200, 300 pips every day because he's being active. He's taking advantage of the opportunities. That's one thing that I'm not doing as well as Chris is doing, is taking advantage of what's happening today. And so Chris is doing a phenomenal job doing that with Right Trader Max. But I think the biggest thing that I want to focus on, and I actually want to tie this back in the 4 p.m. we can maybe get into this, Chris. I want to trade short-term Right Trader Max income focus, and I want to do it on currencies that I believe are the most overbought versus currencies that I think are ready to rally, continuously rally, like the CAD and the Aussie. So what I'm thinking is pound CAD, pound Aussie to the short side. Maybe not right now, but I think that there's going to be a setup that's going to be really nice because the pound is overbought. I think we're due for a retracement, and I think the Aussie and the CAD are setting up nice for that big rally higher.
I want to stop you right there because you hit it on the nail there, and I'm going to go to the charts and flip it over the chart right here, and I'm going to go to a pound. Let's just go to pound Aussie right here. Where is it? Down a little further. Yeah, here we go. Pound Aussie. I'm going to go to the daily time frame, open it up right here, and I'm going to tell you that I'm looking to sell at least in the midterm on pound Aussie dollar, and the reason why I'm expecting it to sell off is because we're hitting resistance right here, so I'm expecting a price to come off the resistance and start heading back down to support again. So if you actually look at my document here, in my document here, and this is not the one that I'm referring to, this is the one right here. Yeah. If you take a look over here, Aussie, pound Aussie, I'm saying sell at resistance, gearing down. Now, gearing down is using the Right Trader technicals. And then deploying it in a bearish only direction. And so what I've done is I'm looking to sell it. But I said to the traders this morning, and bringing to your point there, Tyson, about taking on the short-term opportunities Chris has been doing, is if you take a look over here, if I flip it over to a 1 hour time frame right here, and I'm just going to clean up, and I want to show you something here. These are the Right Trader indicators where we use, Right Trader Max indicators. And if you take a look at the time, that price, now looking at short-term opportunities, check this out. Notice how price moves below these ribbons right here and then eventually trades back above. What time is that? This time is at 5 o'clock in the morning. So 5 o'clock in the morning, price goes ahead and confirms a buy right here and it starts rallying off. All right. And if I go ahead and flip this over to a 15-minute time frame, look how the opportunity becomes even better. Look over here. Here we get a buying opportunity, price rallies up. Now, when you come into the early morning sessions again and price goes ahead and wedges up again, and you're like, well, you know what, we're not completely heading north yet, so look for the buy opportunity. When price is trading above both these ribbons, it's a buy scenario. So here it is right here. Here's a buy scenario. I want to take a look at the risk-reward ratio right here. There's the buy right here at that close of the candle. Place your stop below the low right there. It's about a 56. Let's add 10 to that 66 pip stop loss. Price moves all the way up here to 262 pips from a 66 pip opportunity. This is trading it in the early morning sessions. And now, hey, we're not done yet, right? Market's not selling off yet. It's still trading above this 200 EMA. We come into the early morning sessions again. What happens? Price breaks out again here. There's the breakout right here. Let's see what the time it is. 4:45 this morning. All right, 4:45 this morning. Get in right here. Place your stop below this level right here. This is a 15-minute time frame. Are you kidding me? All right, 90 pip stop right here. Price moves up 233 pips. This is huge opportunities. Now, if you guys,
what it's showing is, don't be too quick to jump in on the short side, and that's why what we've been talking about in the webinars, guys, is being agnostic to what I feel and think, and just trade what is. And what Chris has been doing, I think better than all of us, for sure better than me, is just saying, hey, what is the market giving me today, right now, and how do I take advantage of it? And he's doing it. The nice thing about everything you're showing there, Chris, or Gary, is that's automated. We could trade that in an automated way with Right Trader Max, which is really
well
cool.
better than that. Based on Chris's experience over the last couple of weeks, he's realized that he gets really tired, so waking up at 3 and 4 o'clock in the morning. So what we did is we actually modified the actual EA to be able to go ahead in the evening before the early morning sessions in the evening and actually prepare your trade by using the logic and the rules inside the EA. Listen, if you don't know what I'm talking about, you guys need to get into the webinars, check it out. Chris is going to be talking about it, Tyson's going to be talking about it in the webinars. But basically what it's going to be doing is it's going to help you be able to set up the trades and saying that, hey, if the market breaks this level and closes up above that level, go ahead and make sure that you're buying use my system to buy in that direction. If price trades below this level, go ahead and sell below that level. So you can actually go ahead and set up levels that you want your EA to start trading, and if it's above those levels, it starts trading. Also, what's also great is you can actually now set targets. So if you say I want to chase after this level of resistance or support, and price gets there and you're in a position, it'll get there, it'll take you take your profit out of the market, close you out with all your positions, and it'll go ahead and shut down the EA, remove the EA from the chart, which means that you're basically not exposed anymore. You take your profit, you get out, and that can all happen when you're not in front of the computer, which I believe, Chris, these modifications is going to be a wow factor for most of the students that own Right Trader Max.
It'll make a big difference, and I built it out of need and necessity, which is why I do anything at Market Traders. If I want something, need something, I'd like to build it. So we've done an amazing job with just thinking about what we see the market do over and over again. And I'm not a big indicator fan, but I can't deny that the Right Trader look, the Right Trader Max, it just finds the right rhythm with price, and it just is easy. It's easy to buy and sell, support and resistance. And as Tyson said, the present, I am not going into those sessions with a directional bias. I would like to see price go a certain area or plan on a higher time frame, but the reality is, like, look, pound Aussie, did we see it go down today? Nope. So it goes up 200 pips, and do you have the tool to take advantage of that? And the answer is yes. So it's exciting. It's been a lot more work the last 3 or 4 weeks to be up and trading every single day, but I'm bringing everybody with me. I'm bringing the whole trading room with me, and we're doing it, and we made a killing. We made like 4,700 pips in the last 2 weeks. So we're doing a heck of a job. Yeah.
Real fast,
Yep,
I posted a link to the 4 p.m. Client session. Chris, you're going to be with me?
I will. I'll be with you. For
awesome.
Sure.
And what I want to do is I'm going to go through. Let's bring some great trades to that, and kind of game plan, but also be open to switching the game plan, because the game plan might change tomorrow morning when it's time to trade. So let's be agnostic to it. Let's formulate a plan, but then, like you said, let's get out of the way. For me, anyway, let's get out of the way and let the strategy do what the strategy does best.
Definitely.
All right, guys. Well, thank you very much for your time. I appreciate you guys here. You guys get given so much information about stocks, cryptos, opportunities on the currency market as well. And just talking about the news around the world, basically how that's going to affect the markets. And you guys have been an absolute awesome team. Appreciate you guys being on the show. And, hey, we appreciate you guys watching and just taking some information what we're sharing with you today, and either use it or just forget about it, right? But most of the information that we have pushed over is actually being great input, right? Great input, and you can certainly learn from that. So once again, thanks for coming in. We're gonna be back next week again, and we'll bring up some more ideas and some more trading opportunities as things go by. We're keeping close tabs as to how the economy is being affected by the coronavirus, and we'll keep up the information up to date every week, and we'll go ahead and make sure that we pass that information on to you, but also specifically on how these different trading opportunities have progressed over time. Check out Tyson's webinars, and Chris, you go ahead and make sure you guys join them, because it's not only the predictions that he's going to be talking about, but also to be able to find out a little bit more about Right Trader Max. If you don't own it, you may certainly want to go ahead and pay attention to that webinar. With that being said, Chris, Tyson, appreciate you guys here, and we'll see you guys next week. All right? Well, from me and from the team, Have an awesome week. Have a blessed weekend. And we'll see you next time. This is the FX Big Dog signing off.
Take care, everybody.